Hello everyone, welcome to this webinar presented by ESS BIZTOOls, Advisory Intro. My name is Peter Towers. I'm the Managing Director of ESS BIZTOOls, and I hope that you're having a wonderful day. What I want to show you this afternoon is the advisory intro system that we have developed, which is primarily designed for bookkeeping and accounting firms who are looking to become involved with the delivery of advisory services to SMEs, charities, not-for-profit organisations and sporting organisations. All of these people, all of these organisations need assistance from bookkeepers and accountants to maintain their records and their information. We think your involvement will help improve your client's business operations and will assist in the beginning of the scaling up process, if that's what your clients want, and many of them do. Scaling up means different things to different people, doesn't it? Someone with a current turnover of $500,000 might have a dream of achieving $1 million in turnover, and that's scaling up. Whereas someone else might already have a $4 million turnover and be aspiring to a $10 million turnover in 2 to 3 years' time. That's scaling up. But whatever it is, it's important for your clients, and they will need your assistance to get there. So Advisory Intro is the first package in the ESS BIZTOOls suite of packages. It will assist in offering these advisory services to your clients. What you need to remember is your clients are not used to bookkeepers or accountants talking to them about advisory services. Therefore, you have to create the interest. It will also create interesting and challenging work for your team of people, whether they're bookkeepers or accountants. Everyone needs a challenge. Everyone needs a motivation for developing new skills, learning new jobs, communicating in a different way with clients. And by the way, it will generate a diversified fee income for your firm. Income not solely relating to compliance services. The other packages which we've got obviously include the advisory intro, and then the next one is the starter package. Now, the starter package includes everything that's in advisory intro, and then includes additional information, which is still designed to suit bookkeeping firms and accounting firms venturing into advisory services for the first time, because you'll be offering real accounting services to your clients. The next package is the advanced product package. Now, this is very popular with accountants. It includes everything that ESS BIZTOOls has produced. So it covers chief financial officer services, capital raising, corporate governance, the full package on research and development. It's exciting stuff. And it's real accounting work. And then we have the financial forecasting package, which includes the advanced package and a bit more on, on corporate governance, directors' duties, directors' meetings, and board of advice meetings, as well as the Plan Guru software, which is the fantastic software product that we utilize for the preparation of budgets, cash flows, and projected balance sheets. So let's have a look at the advisory delivery, because that's what we're here today for. We are going to show you shortly some of these products. But the first one is the SME needs analysis. This is the conversation starter. Many of your clients are not used to you talking to them about things other than their bookkeeping work, how they write up their cash book, or how you've processed it through the computers, bank reconciliations, monthly accounts, or whatever financial accounts you prepared. If you're an accountant, you might only see some of these clients once a year, and that's when you've got the annual accounts produced and a tax return. What the SME needs analysis is to try to find out what are the needs of the client, not yours, the needs of the client. So we've drafted some questions which we've fine-tuned over the years. The library of articles, you've got about 300 articles in about 50 different subject headings that you're able to badge and send to your clients. You can charge for them if you like. We have Business Plus newsletter, which we produce each month, which every subscriber gets. You badge it with your name and you can then upload it to your clients. But it's a marketing tool for you. It's information for your clients, but it should be marketing for you. Follow up your clients. Ask them if they read the article on research and development. Does that interest them? You've sent them the article on the raising capital. Does that interest them? Follow them up. Get their feedback. Remember, they're not used to you offering these types of services to them. They probably didn't know you knew anything about it. We're going to have a client profile form in the new system, which will be released in the next 2 weeks. And this will give you information that you can readily contact on the computer, bring it up, and you can hand it to your clients. There's SME monitoring and coaching resources. And there's seminars that you can send to your client. They're pre-prepared, ready for use. It's important that you understand your client from an advisory viewpoint. You need to know more about most of your clients than what you currently do. And I say that because from my experience in running an accounting firm, I think a lot of our accountants only knew something about the client as it related to their tax return. They'd never been to the premises. They didn't know the physical conditions that the business operated under. They didn't understand if they had internal control, because to prepare the accounts and tax return, internal control wasn't an issue. But it is if you're offering a virtual chief financial officer service. You need to know there's some internal control processes. And what about risk management? And where does the stock go to when it's purchased? With raw materials, is there potential problems with supply of raw materials, especially if it's coming from overseas? So you need to know your client's business 1 inch wide and 1 mile deep. And we've got proposals and quotation forms in the system, and we've got some introductory business advisory planning material which will help you. We also have predictive accounting reports. This is budgets for all operations, key drivers of important sub-accounts, debtors, creditors, inventory, capital expenditure, research and development projects. They're all very important. And they're not one-line items in a budget. You need to make sure that you've done the calculations right so that the debtors days outstanding looks realistic. One of the first things I check when someone else has prepared a budget, what's the debtors days outstanding at the end of the financial year? And I look at it and it's 64 days. Then I look at the financial projections and I do a calculation and they're budgeted on 30 days. That's not realistic. What that means is that the business is understating its cash requirements. So we're potentially heading towards a disaster right from the first moment. What's the cash flow forecast look like? Have they brought everything into play? Has the tax debt been taken into consideration? Has the capital expenditure program that's already been put into operation been correctly funded through cash flow? And what are the projected balance sheets? Because I think this is one of the most exciting things that you can prepare, projected balance sheets. So you can sit down and say to your client, this is what I believe your business is going to look like in 3 years' time. As long as you can implement the budgets, which we think are okay, we think are accurate. It enables you to be the storyteller, to tell your client what all this is going to look like, to make them realize it is something that is worthwhile. And the key business system that we are implementing as part of our system, which hopefully you will implement, is the 52-week business enhancement system. Because businesses run 52 weeks of the year, or most of them do. Some are in seasonal conditions, but even in the non-seasonal area, there's normally repairs and maintenance and upgrades and all this going on in the off-season. So therefore, there can be a lot of people still employed around the place. Cash can still be getting spent. But the 52-week of the year business enhancement system is acknowledging there's something happening every day. That's why we've got daily business reports. They might be as simple as number of customers, average sale, gross profit percentage achieved today, overall in various departments, if it's able to be measured on a daily basis. But it's giving management some feedback. And that would normally be the feedback that the client wants to get. And weekly, I think every business should be preparing the weekly performance report, which is a mixture of key performance indicators and business metrics, which explains to a manager, a section leader, key information. It might be a yield percentage if they're in the meat industry or any sort of industry processing products, whereby they're starting off with a whole and they're cutting key components out of it. What's their weight loss? What's their yield? All very important information. But then it's the profitability report. Now, I got introduced to the profitability on a weekly basis concept when I started as an accountant at a fairly young age in a major meat organisation, meat company, second largest in Australia. And within a few years, through some lucky breaks and a few other things, I was the Chief Financial Officer, Company Secretary of that public company. And you know, we ran our 400-odd business activities on weekly profitability reports and key performance indicators and business metrics. The company was divided up all over the 3 eastern states with an area manager, an accountant, or a office manager, some clerical assistant staff, and obviously activities. Our largest sections had a meatworks, and then we had retail butcher shops and small goods factories and hide stores and cold stores. Well, we had plenty of cold stores. And they were all treated as separate business units, and each one of them had a weekly profitability estimate prepared. And it was a system that worked quite well. The area manager was getting their reports on Monday afternoon and Tuesday. They were examining them. They were all sent then through to my team in head office. We analysed the 400 of them and prepared an overall summary, which I then briefed the CEO, normally over a sandwich and a cup of tea or coffee at lunchtime. And he was only interested in the ones that deviated from what our budget showed us they should have made. The ones that deviated, he wanted to know why. So he was on the phone to the area managers. And they would talk it through. Now, what this captured was real-time management. They were looking at things that happened last week, 2 to 3 days after the end of the week. 2 to 3 days after the end of the week. And they were able to fix problems. We fixed heaps of problems because assumptions had been wrong. Someone had made a decision, wasn't quite right. The scales weren't working correctly, we found in one case. Or the product we thought we were buying in as a special product didn't turn up in time. So instead of having it at $10 a kilo buying price, it was costing us $25 a kilo. So it made a bit of a difference to the bottom line, of course, as we had it on special at $12.50 or situations like that. But they were able to be answered or fixed if they were a problem within 3 days of the week ending. The answers were known and we're ready to fix. Compare that to your client at present that might get an annual set of accounts and a tax returns. And if you say to him, well, geez, your gross profit was down for the year. Last year you made 34%. This year you've only made 23%. Is there any reasons for that? We should go through that. The tax man might ask some questions. It's all too late. No one can remember all that. I think our role using the technology and the knowledge which we all have and the communication devices we have at our fingertips these days means that we can implement these services. And years later, I found out that Woolworths and Coles and a whole range of other big businesses all use the same approach. They do weeklies. They run their whole businesses as if it's a series of small businesses. Yet a lot of our small businesses don't do it. They don't like the discipline. Well, the discipline needs an accounting mind in there to make it all work. because the managers aren't going to sit down and do all this calculation. They're expecting you to do it. So if you're offering a virtual chief financial officer service or some phased down component of that at the very beginning, this is the type of service we need to produce so that we have daily reports, weekly reports, and then monthly financial reports, which is the individual profit and loss account for each of those activities that you've got. In our case, we had over 400 of them, 400 P&Ls prepared each month, compared back to their budgets, a variance report prepared for each of them, so that if something had been missed in the weekly wash-up, it was brought to everyone's attention with the monthly. But our managers were in such a situation that they relied on their weekly reports. All that the CEO really wanted to know at the end of each month, did the weeklies reconcile with the monthly accounts? Peter would say to me. I'd say yes, or we're out in a few areas, okay. Because he had his managers, the area managers and the managers under them running the individual business operations, were geared to, we've got to get it right this week. Compare that to your clients. And I think if we can implement this type of philosophy to our clients, a lot of the failure rate in small business will disappear, because a lot of the problems are going to be highlighted a lot quicker. Not 12, 14, 15 months later, as happens in many cases now. And the balance sheet should be analysed, because the balance sheet analysis gives us important business metrics, doesn't it? Debtors days outstanding. It was budgeted at, example I gave you before, at 30 days by mistake, whereas the actual's up around 70 days. They're going to run out of cash quick. So we need to be comparing things and really analysing them, not just preparing it and putting it in the bottom drawer and forgetting about it. So that's the working capital analysis. And then you would prepare a monthly financial report. I think this is real accounting stuff, because you're acting as the CEO to advise the owner or the managing director of funding requirements. You might need some extra money. Have they got some spare assets to offer as security to a lender? Or would they entertain the idea of trying to raise capital? Some of your clients might raise an objection to that, but when they think about it, they might be in favour of it. You can give them the information. I'm going to show you a tradie charge-out rate calculator, because virtually every one of the people that are watching this recording will have tradie clients. Do you sit down and help them to prepare a calculation to ensure their charge-out rates are accurate and will recoup them the profit that they're aiming for in the business over the year? And do you monitor it each week to see what the productivity percentage for each characteristic of the employee, so that modifications can be made to the charge-out rates? If their productivity was calculated at, say, 80%, and they're only achieving 71%, that 9% difference in productivity is going to amount to a fair bit of money at the end of the year. It's going to affect the profit forecast. Government grants. There's a whole stack of government grants out there. Commonwealth, state and territory grants, and some local government areas around Australia. The one that we're featuring in this particular product is the Research and Development Income Tax rebate, which we're going to have a look at shortly. Capital raising, preliminary advice. We're setting up the advisory intro package so that hopefully you can give preliminary advice to your client, because if you don't know it off the top of your head, you're going to be able to press on your computer and immediately bring it up on your screen and print out a report for your client and give them advice. So if the client's asking you, well, how do I go about raising money as equity capital, there's Section 708 of the Corporations Act, and you'll have the brief there on that, raise up to $2 million from 20 investors, but that's a maximum. And you can't advertise it or market it. The early stage innovation company is fantastic for people who've been involved in the development of new innovation, research and development activities. And there's a carrot in that for the investors, because if investors invest with them, they get some tax breaks for making those investments. Yeah, great, isn't it? And crowdsourced funding equity raising. If the client's got a turnover of under $25 million, gross assets less than $25 million, they can raise up to $5 million from individual investors through the crowdsourced funding equity raising process. Now, there's rules to each of these methods of raising capital that your client's got to abide by. And you will need to understand the process because you're the key communicator to them. Now, what everyone's got to make up their minds about is how far you go on some of these things. Initially, we're giving you the information. You can explain to your client how it works generally. Whether you want to be the professional that actually guides them through that process is up to you. Perhaps you need to refer them on to your accountant, and this might to their account, and this might get back to the relationship you've developed with the accountants that you're working with, or your clients are working with, if you're a bookkeeper. But if you're an accounting firm, you need to decide who's going to handle it. It might be someone senior in your own firm who you say, well, Jim's the expert on capital raising. So if you get a client that's interested, you refer them on to him. But we want to give you the tools, the resources to be able to answer the initial questions or to raise the initial discussion. Think about it. I think that's offering real services. You might be looking at buying a business, or a client might be, and you can give them advice on that. We've got systems on that. Working capital, debtors management. Debtors is one of the biggest problems that SMEs have got. So we can give you some guidance on that. And corporate governance, we've developed a whole range of additional information to assist on directors' duties and committee members' duties for not-for-profit charities and sporting organisations as well. Banks, your relationship with banks, we've got some notes on that. And ASIC, return of allotment of shares and the other things you've got to do with them. So what I want to do now is just bring up for you the so on the screen now, you've got the overall summary, forget the membership subscription at this stage, of what's in ESS BIZTOOLS. And we're just going to work through and show you some of these. So what I want to just show you is the SME needs analysis. So the material I've got on here now is basically the material that's contained within the package. Within the advisory intro package, we have the SME needs analysis. We call this a simple SME need analysis. It just means that it's very straightforward. So the questions here are: how can you improve your business, your role, what do you feel about your job, hours worked, your team, your IT changes. It's meant so that you can sit down and have a cup of tea or coffee or glass of wine, if that's your preference, and the client's preference, of course, to discuss their business. What are you looking for? What are they wanting to achieve? The next item I want to refer to is the charge out rate calculator. This is for the tradies. So we could go back and look at it. We have some instructions. So there's instructions there that you go through and look at. There's the calculation of the labour on cost. This gets forgotten a lot when people do budgets for working out a charge out rate. And we have made provision for 6 different classifications to be recorded that have got the same annual leave, holiday pay loading, superannuation percentages, payroll tax, etc. So if they're different, you would put the details in another one and change these and so on. So in fact, that gets repeated again underneath there. So we've got provision for 36 different classifications. No one's ever come back to me and said that's not enough. So I think that's probably enough. We also have permanent part-time employees that you basically fill in the details of who they are, and you've got 36 potential combinations. And then we've got casual workers. It's the same thing. There's 36 of those. So I think you'll find that that's enough. Then we can transfer across now to the labour calculation. So the information you have to insert is the number of individuals in A1. So whatever was recorded in the on cost and was referred to as the first one in A1, put down the number, the salary. System will then calculate. So if you had 2 there at 70,000, you got 140,000. The labour on cost percentage has been established in the labour on cost for that category. That's the calculations. And then all you need to do is insert the productivity percentage that is expected from that particular classification, and the system will do the rest of the calculation. So you just follow that through. You might have a couple there in the A's that the next lot might be down in the A2s or could be down in the A3s, and then it might skip down so that we're getting into the people who are part-time or were casuals. And what the system will then give you is the total amounts, and will charge you and will show you the total chargeable hours, the paid hours. It's all worked out. We then go to the budgeted overhead expenses. You insert the overhead expenses for this particular business and obviously total it, and that will give you the totals. And an important calculation then is to look at budgeted materials markup. This is an important issue for tradies because they have markups, and we will be able to show what purchases they expect to make on behalf of clients in the year. Might be $1 million. Are they going to mark them up? Now, you might have a real conversation with some of your clients because a lot of them never really thought of this, but okay, yeah, we'd like to mark them up 10%. So that's obviously going to show the markup's 100,000. And then we need to determine, are they going to use all of this as a subsidy on their charge out rates, or are they going to try to maintain this as a super profit, this 100,000 in their P&L account? They tell you which way they want to do it. Are they going to have write-offs or write-ups? We can put that percentage in there. Then the system will calculate for you and show you what the targeted income from sale of labour is. So we've got the labour, including on costs, and I forgot there to mention the return on investment. That was requested there somewhere. and may well be half hidden. I can assure you it's here somewhere. So the information is then able to be shown, and we will have in effect a budgeted target. The system then goes through some calculations on base time, cost and business overhead factors, and will then deliver you a suggested summary going back to those original indexes of A1, A2, A3, etc., what the charge out rate needs to be there, and then you'll get a proof document whereby it names the classification and what the income is going to be. So you can see what the total income is for the year, and then we got the budgeted profit. The system will outline what the revenue is going to be, the overheads are going to be, and we'll show you that the forecast profit is the same as what or within a few dollars of what the target was. That's the whole idea of that particular report. I hope that will be of some benefit in delivering to clients. Now, we've got some of our accounting subscribers have really developed this particular product into a key part of their firm. One firm has got 120 tradie clients. They're charging an extra $8,000 per annum each to undertake the calculation of the charge out rates for them each year, but then to have a monthly set of accounts so they can compare the actual charge outs percentages that have been, productivity percentages that have been earned, and make adjustments. It's a great package. 120 at an extra $8,000 each, is a fair bit of money, and they're still getting their original $2,000 for the preparation of the annual set of accounts and the tax return. How many tradie clients have you got in your client base is probably something that you might like to think about. So the product package which we're offering you as the advisory intro product package covers the whole system that includes a lot more than what I've just shown you, of course. It's just a brief session. 12 months upfront subscription is $900 plus GST, $990, or you can pay monthly if you wish, 12 monthly payments of $99, including GST. Now, this is a special offer that's available until the 7th of May, and we would love to hear from you if you wish to subscribe. If, for argument's sake, you were interested in the starter package, which includes more material, the subscription is upfront $1,800 plus GST, so $1,980, or on the monthly payments, including GST, $198 a month. Or if you are interested in the advanced package, which is a fantastic package, includes a whole range of issues for accountants to offer real advisory services. The upfront payment is $5,400 plus GST, $5,940, or 12 monthly payments of $540 plus GST, $594. Now, I'm not necessarily suggesting you might want to be subscribing to any of these packages more up the price chain at this stage, but we do have bookkeeping firms from around Australia who are subscribing to these packages and using them to differentiate themselves in the marketplace to their clients. And the financial forecasting package, this is our big one. This includes the Plain Guru software and includes Plain Guru training prepared by Paul Barnaby, a fellow of the Institute of Chartered Accountants and an expert in predictive accounting. So this costs $9,600 plus the GST. So it's $10,560 is the total package, or you can pay it monthly, 12 monthly payments of $1,056, including GST. So they're the packages. Now, all those prices are set until the 7th of May this year. Now, the group training that we're reorganising as from 1 May, we've obviously got 4 product packages. There are 10 training sessions of 1 hour each for each of those 4 products during the year. So it's 40 training sessions. That's no additional subscription for any member. You are told the program. For about half of them, we will set a theme for that particular session. The others, we can ask our subscribers, what do you want to hear about? What's your concern? We'll present the training session around that. But if you wish, you can hire us to undertake one-on-one or one-on-your-team training sessions using Zoom, and we will enter into an agreement on that. It will be around $300 plus GST, $330 for 1 hour of training, delivered in that manner. So if you wish to subscribe, please go to www.essbiztools.com.au and click on packages and pricing, and then click on the product package that you wish to subscribe for, and then complete the subscription process. That will be wonderful if you can do that. So if you've got any questions, please let us know. That was the slide for the last time. We do have a session tomorrow if you wish to come at 1:30 p.m. Please go onto our website to register. It's just a follow-up for discussion and questions about issues raised in today's webinar. So thank you for joining us for this webinar. We are sending the webinar recording around to everyone which we have on our targeted list of people that might be interested, so that we hope that you will be able to join us. Thank you very much. Have a wonderful day. Goodbye. And I look forward to hearing from you. If you have any questions, please contact us. We would love to hear from you. Stay safe. Have a great day. Goodbye.